Let's welcome on board Shivangi Sarda as well as Kunal Bothra then and try and analyze what the market mood is back home and what the technical construct for the markets is looking like. Shivangi, hi, morning. Good to have you on the show. What is it that you made of the last 1 hour volatility, that swing and attempt of a rebound and the way it got sold into?
Very good morning. Thank you for having me. So we've seen that, bears have had the full control over the market in the last four sessions. And even though there was a slight bit of a recovery or a rebound in the last trading hour yesterday, it wasn't sustainable. And clearly, we have seen that selling pressure has taken over the entire market. Of course, with India VIX also rising above 15 levels, there is some sort of a discomfort that is coming into the market. Now, the sell-on bounce will continue for this kind of a market, and I believe we've reached the important 24,750 marks yesterday, which is opening a new downside of 24,500 and then 24,250 levels. So this is the next levels that we are watching out for. A little bit of more caution over here, sell-on bounce to continue for the Nifty index. And talking about the bank Nifty, also we are seeing that the selling pressure is continuing over here with in line with the broader market. In fact, we've seen that it's wiped off most of its September gains, and we are back to where we had started. August series, and there is clearly the giving up of the heavyweights here as well. So sell-on bounce to continue over here as well. We are looking at 49,500 as the next marks that we could touch.
Okay, those are the levels that one needs to watch out for at the key indices. But Kunal, what's your view on the market? Have we bottomed out already, or there is going to be some more pain before we find that?
I think bottoming out would be a process, and it may not be one day move for the indices. Yesterday, what we saw was two intraday attempts by the bulls to try and make a strong comeback, at least on the bank Nifty, where we saw the banking index recovering almost 1,000 points, 1,200 points on an intraday basis, and that generally indicates that maybe we could be at a point where the markets could get back into a stability. But then I think if the global market starts to get back into a corrective mode, like what we saw yesterday for the US markets and today for many of the Asian indices, then I think the ripple effect could be felt into our markets as well sooner or later. So my sense is that over the next couple of days, I would probably expect that the markets could stabilize. We may try to establish a range. 24,700, 800 could be a broad support for the index over the near term. And on the upside, 25,000, 25,100 could be taken as an opportunity to try and create fresh shorts, or maybe try and exit a few longs from traders looking at the bounce as well as the overall structure of the markets. But I think what we've seen over the last 6-7 days of this consistent selling is that the nature and the trend of the markets have been broken, and we could be looking at the markets going into a prolonged downtrend. Now that prolonged downtrend depends on how the global markets shape up going forward.
Okay, prolonged downtrend. But since you're talking about the global markets, Kunal, what's your view on the China and the Hang Seng market today? And that definitely deserves mention given the fact that Hang Seng has fallen by almost 8 to 10% right now. China opened 10% higher, but right now it's pared down almost 5% of those gains. What's your take? Because a lot of people in the last week were moving from India to China as well. What's your thought?
See, at least the major part of the shuffling from Indian markets towards Chinese markets, that fund flow I think could be behind us, because today traders would be more busy in trying to trade the Shanghai markets. I think that's why you're seeing the reactions being a lot more different from our markets as compared to their markets. Overall for our markets, we were going through a major selling. There was a massive selling which happens across the data for large cap names for our market indices. And that's not the change which you're seeing for the Asian markets. You're seeing those those markets being bought into. So Hang Seng, Shanghai, these are the indices which I think had rallied 28%, 29% if I'm not wrong in the last 6-7 days. So there's bound to be a point where those markets would get into a correction. But then whether these markets have given a breakout, I think that looks like more of a certain that these indices have given a big breakout for themselves after 2-3 years of these indices remaining to a downtrend. So yes, the initial part of the price rally has got these indices into an overbought territory. You might see a price adjustment over the next 1 week or so, where these indices may cool off, come back into a mean reversion point, but then gradually trends would start to shape up. So I think what we need to see is the trend for the global markets. If there is any major correction which happens across the US and the European markets, that I think could probably add to the concerns for the global equity markets. Other than that, I think that possibly Hang Seng and Shanghai, they could rally further.
Okay.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.